We're talking about 50% profits within a few weeks, even within a few days. The stock price of PDD, the mother company of Temu, has dropped more than 30% in the past few days. In fact, on the 22nd of August, it was $150. Guess how much is it now? On the 27th of August, it is $100. The key question for us is that whether there will be a V-shaped rebound, which we can raise from $100 back to $150, meaning 50% profit within a few weeks' time. If this is the first time you're here, my name is Eric. I've been investing since I was 18 for more than 20 years. Yeah, I know I look a bit younger, but Asian don't age too much. Anyway, I invest in all sorts of stuff you can think of: stocks, ETFs, mutual funds, bonds, options, futures, warrants, watches, even pens. Anyway, in this channel, I'm going to share with you my business ideas and my views about Chinese stocks listed in the US. Remember, subscribe so that you're not going to miss out. Okay, first thing first, why does the stock price of PDD crashed? The main reason is because the results of Q2 2024 has just been announced, and the results were lower than expected. The sales grew 86%, which sounds pretty okay, to $13.63 billion. But on average, the consensus among the analysts from different investment banks expect that to be $14.04 billion. The second reason is that the co-CEO mentioned that the outlook is not as good as expected. There are various reasons. First of all is profitability would expect to go down, partly because of competition and also the general environment in the macroeconomics. And the second point is that, of course, there are more and more competitors. For example, Alibaba and JD.com locally in China and Amazon in the Americas. For example, the macroeconomy in China is not doing particularly well. It is slowing down in terms of consumption. That's why you see that JD.com and Alibaba both saw their Q2 results went down or lower than expectations. Hence, the stock price were going down too. However, I still think that we can make 50% profit within the coming few weeks. Here are the reasons why. First reason, the profits actually went up 139%, which is quite amazing. And you have an honest CEO who tells the real outlook instead of lying. I think that's cool, right? The second reason is that if you look at profit per share, they're actually beating the consensus. So they made profit $3.2 per share, compared with the consensus of $2.73, which is much higher. Also, comparing it last year, Q2 2023, it was 1.45, which means that the profits per share increased more than 100%, which is super amazing. The third reason is simple. How many companies can provide a growth like PDD, which has 20 to 30% or even much higher percent in terms of sales growth? Not many on Wall Street, period. The fourth reason is that the price to earnings ratio is super low. This kind of high growth companies, like Alibaba or JD.com, usually they will have double digits or even triple digits of price to earnings ratio, PE ratio. But in this case, it is less than 10. We're talking about single digit at this very moment. So this is extremely unusual. If you don't know what is price to earnings ratio, check out the links above in my older videos. The fifth reason is that during a recession or when the economy is slowing down, companies that are on the lower end of the spectrum, for example, Walmart, Sam's Club, or other companies that sell goods that are cheaper, are most likely to profit from the different spending behaviors when people are trying to save costs. So PDD's Temu, which is an e-commerce platform selling extremely cheap stuff, could potentially profit from the recession or the slowing economy. Of course, they're not just sunny and rosy here. There are also some challenges about whether the business model would be sustainable in the US. At the moment, they are basically subsidizing the US products with the profits they have gained in China. That's why it's super cheap, sometimes even loss-making. And the second point is that the quality of the products is obviously not high. Of course, you can say that you have a very low price, compete with price, with scale, which they have the scale, but still the quality need to meet a minimum standard, and I heard that many of the quality is not good. The third point is that they are not alone in the business model anymore. I heard that Amazon is starting to ask suppliers in China to supply goods directly to their platform in US. That's exactly what Temu is doing. So potentially Amazon can challenge PDD and Temu in terms of the super cheap market, e-commerce directly connected to Chinese suppliers. This is a big challenge. The fifth reason, last but not least, the macroeconomy and the US-China relations. At the moment, there's a trade war brewing. So if Temu is caught between the crossfire, PDD's stock price would go down as well, especially if US ban PDD from trading in US or forbid them from selling goods on Temu in the US. This would be a big problem. So what's my verdict? Will there be a V-shaped rebound of 40% or even 50% of profits within the coming few weeks? My answer is yes, because the main reason that it drops 30% within a few days is just the difference of expectations from the analysts. But the difference is actually very small. The expectation was $14.04 billion in terms of sales, and the actual results were $13.63 billion. So if you round it up, both of them are $14 billion. Okay, just kidding. The difference is still $400 million. So it's not a small difference, but still, this is not unexpected because you already saw the results from Alibaba and JD.com. Both due to the macroeconomy went down and lower than expectations already. So why would you expect that PDD would be above expectations? That's why I would say that I would bet a small amount of money to bet that it would go up 40 to 50% or at least 20 to 30% in the coming few weeks' time. But of course, a disclaimer, right? I'm not a financial advisor. This is not financial advice. This video is just for entertainment and informational purposes only. Please consult your own financial advisors if you want to make trades or you want to make any investment decisions. By the way, do you guys want me to talk about Chinese stocks listed in the US? If yes, leave me in comments below so that I can continue working on this direction. Hold on, one very important topic before you go. The like and the subscribe buttons are for free. And 85% of you have not been subscribing to the channel. You cannot imagine how much a difference you can make just by clicking those tiny little buttons to keep the channel going. Would really appreciate that if you can click the like button and the subscribe button now. Thank you and see you next time.